One factor needed to bring costs down, more workers. They're coming in slowly. The overall labor force has finally recovered to its pre-pandemic levels. Some states are enjoying a notable surge in their labor forces. Migration during COVID-19 continued pre-existing trends of people moving to the Sun Belt. Now 11 states have seen their workforces grow by at least 3% since COVID. Arizona, number 1, Colorado 2, Delaware 3, Florida 4, Idaho 5. Idaho has had the 5th most rapid growth by state in the nation. Then Montana, then Oregon, then South Carolina, South Dakota, Texas, and Utah. Okay? Now, what that means, guys, if you are on the phone with somebody who insists on investing in states outside of where they live, they should be investing in these 11 states. Now, did anybody read Ohio on here? Did you hear Ohio? No. Michigan? No. Pennsylvania? No. New Jersey? No. New York? No. Why? Because those states are declining in population. Because they are taxed heavily and they're moving south. Which means to buy real estate in those markets, prices are coming down because there's not enough people to buy the inventory. You want to win in real estate, you buy in these 11 markets. This is not difficult to understand, but the client needs to know it. Housing. After a meteoric rise, gains in home prices are finally starting to slow down. The S&P CoreLogic Case-Shiller National Home Price Index rose 18% in June from a year earlier versus 19.9% in May. Surging mortgage rates combined with a jump in prices pushed down home affordability to levels not seen since the early 2000s. Housing markets in the West have cooled the most. Seattle and San Francisco had the biggest price falls, down 1.8 and 1.32% from the prior month. Guys, do you realize that 1.89% decline in valuation over a month is 24% annually? Which means a $100,000 piece of property will be worth $76,000 by the end of the year. Now multiply that. $400,000 house is worth $300,000. $600,000 house is worth $350,000. Prices also fell in San Diego, Los Angeles, and Denver. Phoenix and Las Vegas are up, but gains have slowed considerably in both metros areas versus recent months. Okay? So again, I educate you guys on these things so that you can educate our borrowers and our clients and our lenders so that they understand the forecast of what is coming. Okay? You guys have got to be familiar with the market. You got to speak intelligently about what's happening, and you've got to give them good information about how to navigate through it and not just survive through it, but thrive through it. The reason we're doing this class on Saturday is this is the best market to negotiate seller finance deals with sellers than we have seen in the last 15 years. Our acquisition team, I mean, it's the greater majority of the deals that we've been doing in the last 60 days is where the sellers are carrying financing so that we can buy their home. Some with no money down. Some with interest rates as low as 3%. We're buying houses, seller finance at 3%, when if we went to the bank, it would cost us 6.5 to 7. Now is the time to be buying real estate. And so for those that are on the phone that you're dealing with and they're going, I don't know, the market's freaking out. Well, where are you buying? I want to flip houses in New York. No. Put your house up for sale, move to Florida. Seriously. That's going to be a much better use of time.